Hello friends, welcome back. In this lecture, we'll be discussing about the three golden rules of accounting based on our real account, personal account and nominal account that we had discussed in the previous lecture. So, as per our golden rules, for the real account, the rule is debit what comes in and credit what goes out. So whatever any asset or property comes in, adds on, then you will debit the account, and whenever the asset or property will move out or will reduce, you will credit the account. Now for the case of personal account, like whenever the supplier, customer or lender of money is receiving the amount, then we have to debit that receiver, and whenever any supplier, customer or lender is giving the amount, then you have to credit the giver. Simple. Now the third account we have is a nominal account, in which we are taking incomes and expenses ledgers like electricity expense, commission received, purchase, sale. So in that case, if any expense or loss occurs, then we have to debit that account. For example, if the commission is paid, then commission paid is our expense, then we'll debit that account. And if we are receiving the commission, then this is our income, so we will credit the commission received account. Likewise, if we are making the purchase, then this is our expense, then we'll debit the purchase. And in case of sale, from sale we'll receive the cash, this is our income, so we'll credit the sale account. Now we'll learn these accounting rules with the help of a game. Let's think about a football playground, and whenever we think of maintaining accounts of an organization, you just have to think the business is like a playground. Easy? Now, in a playground, some entities come, like some players come, and they are playing a game of throw and catch of ball. So, treat your accountant, business accountant, as your referee or judge in the football game. The points recorded in the game will be, if we throw something, then we'll credit the amount, and if we'll catch something, we'll debit that amount. Now, the players of the game are called as my ledgers in my accounts, and the throwing and catching activity in the football game is known as a financial transaction in my business. So, the points will get reflected in the individual ledger, as we had discussed about the ledgers in the previous lecture. Now, so when the owner starts the business, he himself becomes the first player. Why? Because he starts by investing some money in his business. So Rahul Gupta here is a first player and thinks to invest some cash for the business of soda drinks. Now what Rahul Gupta is doing? He is taking out some cash from his wallet and putting that cash in the cash box. So here are two players that join our game. The players are Rahul Gupta and Cashbox. So as like we are having many of the ledgers and the players in our business, as we have in the football game, like purchase of goods, company's account in bank, cash box, sale of goods, bank charges, Kingsbay Hotel, our customer, telephone expenses, electricity expenses, tea expenses, suppliers account, income commission received, and discount received. So these all are the players of our football game and known as the ledgers in my business. So now we'll see how the entries will record. The first entry is Rahul Gupta decides to start trading business of soda drinks. So he thought to invest some cash of rupees 30,000 in company's cash box. So here our cash box is increasing, and the Rahul Gupta's capital is decreasing. So what we'll do, the pointing side of this transaction will get debit and the Rahul Gupta will get credit. Like as per the accounting rules, cash is a real account. So debit what comes in and credit what goes out, or debit the receiver, credit the giver. So here the giver is Rahul Gupta. So Rahul Gupta will be credited and a cash is coming in. Our real account is adding. So we'll debit the cash account. Now our entry becomes cash account debit to Rahul Gupta's account. Now my second transaction is a company purchased soda drinks by paying cash. So here cash is going. The real account is decreasing and my purchase account, that is my expense account, is coming in. So for that, what we have to do for expense, here it is nominal account, and what nominal account will be debited and the cash is going out. So this will be credited as this belongs to the real account. Likewise, the third transaction is the company sold soda drinks worth rupees 2000 for cash. So here the cash will be debited and the sales will be credited. Nominal account, and this is our real account. Correct. Real account will be debited and the sales account, nominal account will be credited. Now the fourth transaction is company purchased soda drinks on credit from Soda Supplier Limited. Now the supplier, what supplier is giving? So supplier will be credited and purchase will be debited. So the entry becomes purchase account debit, soda supplier account credited. This is personal account and this is our nominal account. Now the next transaction is company sold soda drinks on credit to Kingsway Hotel. Now Kingsway Hotel is a nominal account. This is receiving the goods, the receiver. So the receiver will be debited and the sales is my nominal account, that is my income account, and this will be credited. So my transaction becomes Kingsway Hotel account debit to sales account with 6,000 rupees. Now next transaction is we have received a check from Kingsway Hotel. So here what will be happening? What will be happening? The Kingsway Hotel is giving us the check. So here means we will have to deposit the check in the bank, and for that we have to open the current account in the bank first. So Rahul Gupta decided to open a current account in ICICI Bank. For opening the account, he decided to deposit some cash of company in the ICICI Bank. So what will we'll do here? We'll debit the ICICI Bank account because this is increasing. This is a real account and this is a asset, and cash will be debited. Again real account, but this is decreasing. So the entry will become ICICI Bank account debit to cash account. Now we will deposit the check from Kingsway Hotel in the bank. So what is happening here? Our real account, ICICI Bank account, is increasing. So we'll debit this, and the Kingsway Hotel account, the giver will be credited as per our personal account rule. Now the next entry is we have received commission by cash of rupees 5,000. So our cash is increasing, real account is increasing. We'll debit the cash and the commission received is our income. So we'll, as per the nominal account, we'll be crediting the commission received. Our entry will become cash account debit to commission received account. Now the next is we had paid electricity bill by cash. So cash is going. Now real account is decreasing. We'll credit the cash, and electricity expenses. The electricity expense is a nominal account. So this is an expense. So we'll debit electricity expenses. Now the next transaction we can have here is discount of rupees 500 was allowed by Soda Supplier Limited. Soda Supplier Limited has given us the discount of rupees 500. So this is discount received is our what? Income. And what we'll do about the income? We'll take it to the nominal account. And what will the rule applies? What will the rule says? We have to credit discount received. And who is the giver of this income? The soda supplier limited. So the soda supplier limited will be debited as per the personal account. Now, our next transaction is check has given to Soda Supplier Limited of rupees 2500. So here my bank amount is decreasing as we are providing check to our Soda Supplier Limited for the balance amount. So here ICICI is my real account. For that we'll debit the ICICI account as we are decreasing our balance, and Soda Supplier Limited is receiving the amount. The receiver will be debited as per the personal account. So entry will become Soda Supplier account debited to ICICI bank account. Now the next transaction is received rupees 1500 in cash from Kingsway Hotel. We are receiving the cash from Kingsway Hotel. So cash is receiving. So the real account is increasing. We'll debit the cash account, and Kingsway Hotel is the giver of that cash. So as per the personal account, Kingsway Hotel account will be credited. Our entry will become cash account debit to Kingsway Hotel account. Is this clear? Now our next transaction is T expenses of rupees 100 paid by cash. So T expense is my nominal account and the expenses will be debited as per the rule. So T expense account debit to cash account, as cash is a real account and it is decreasing. Now ICICI bank account deducted rupees 200 from our account directly towards the issue of checkbook. So they are issuing the checkbook and they are deducting the amount from our account. So my ICICI bank account is a real account. So here this is decreasing. I am crediting the ICICI bank account, and my bank charges is my expense. So as per the nominal account, we'll debit our expenses. Then the entry becomes bank charges account debit to ICICI bank account. Our last transaction is the company had paid telephone bill of rupees 300 by check. So if the check, we are providing check, then what will happen? ICICI bank account will be decreased and the telephone expense is my nominal account. So as per the rule, the nominal account expenses will be debited and my real account is decreasing. So this will be credited. So our entry becomes phone expense or telephone expenses account debit to ICICI bank account. Now this is all about the transaction, the basic day-to-day transaction that we face in our business or company. So we'll post this like this in our journal ledger. So I have posted Rahul Gupta invested cash, and what I had done, cash account debit to Rahul Gupta. Likewise, I had prepared a journal entry book for you over here. You can practice and you can check your entries with them. Thank you.